much chatter right now about the Bitcoin ETFs and how they're futures-based versus spot. So can you just give us a little insight on what's the difference between a spot ETF versus a futures ETF?
Absolutely. Great question. And I think it's a question on top of a lot of investors' minds. So, a spot ETF is essentially how you would intuitively structure a fund that tracks the price of an asset. The fund would purchase the asset and hold it in their own custody. And, you would own shares in the fund that holds that asset. And by extension, you would be tracking the spot price of that asset. Unfortunately, currently the SEC has certain unfounded fears about price manipulation in the spot market for Bitcoin because there's no regulated market for them to monitor action. So, they wanted to see how a futures-based ETF would perform first because there's already a regulated futures market for Bitcoin in the CME. And so, a futures-based ETF launch, and what a futures-based ETF is a fund that essentially purchases futures contracts on an underlying asset. There's futures-based oil ETFs, futures-based gold ETFs. And, they are a net positive for a lot of, non-crypto native investors, because, a spot-based ETF plugs directly into traditional financial market rails. They're available on most traditional brokerages. And so it's connecting a lot of investors that otherwise wouldn't be able to gain exposure to Bitcoin, to exposure to Bitcoin. The drawbacks for the futures-based ETFs are that there are certain costs associated with them, mainly rollover costs. So what happens when the futures market is in contango, which means the futures price is higher than spot price, the futures contracts for 4 months are actually more expensive than the current month contract. And to track Bitcoin price effectively, these futures-based ETFs need to sell current month futures contracts and purchase the next month's. Which inevitably ends up costing the fund and consequently investors, some money, and actually ends up causing the fund to deviate from the asset's performance. We've seen historically on an annualized basis, these rollover costs can, average anywhere between 5 and 10%. Currently, I believe the leading Bitcoin ETF is currently the rollover costs have been in the 6 to 7% range annualized, which is pretty solid. But we've seen already since the launch there has been incredible amount of demand. But they've been pretty good at tracking Bitcoin price. However, there has been a 1 to 2% deviation from a returns perspective since launch. So just something to keep in mind.